In the next 7 minutes, you'll learn the 5-step system that turns $200 a month into 1.2 million, even if you know nothing about stocks. Step 1 starts in 15 seconds. But first, while your friends are scrolling Instagram, the S&P 500 just made early investors 16.5% richer this year. Every day you wait costs you thousands. Let's fix that. And no, I'm not going to tell you to buy some sketchy cryptocurrency your cousin's friend is hyping up on TikTok. Too risky, or something rich people do. Meanwhile, someone who started investing just $200 a month at age 22 will have over $1.2 million by retirement. Someone who waits until 32, they'll have less than half that, even if they invest more money. And here's the crazy part. You don't need to quit your job or become a day trader. This works while you sleep. The wealth gap isn't just growing. It's accelerating. And the question isn't whether you can afford to invest. It's whether you can afford not to. But before we dive into how you're going to build your fortune, you need to understand what the stock market actually is. Drop A in the comments if you're actually going to do this. Forget everything you think you know. The stock market isn't a casino. It's not gambling. It's literally owning pieces of companies that run your life. Every time you order from Amazon, stream on Netflix, or use your iPhone, those companies are making money. And when you own their stock, you make money too. Think of it this way. When you buy a stock, you're buying a tiny slice of a business. If that business grows and makes more profit, your slice becomes more valuable. That's it. That's the entire game. Quick reality check. How many of you just thought, but I don't have money to invest? Keep watching. I'm about to destroy that excuse. The S&P 500, which tracks the 500 biggest U.S. companies, has returned an average of 10% per year for nearly a century. Not 10% total, 10% every single year. You can begin with the cost of a few lattes, but here's where most beginners mess up. They try to pick individual stocks like they're playing fantasy football. Let me introduce you to your new best friend, the ETF. Exchange-traded funds are like buying a pre-made diversified portfolio in one click. Instead of trying to pick the next Apple or Tesla, which even Wall Street experts get wrong, you buy one fund that owns hundreds of companies. The most popular? VOO, the Vanguard S&P 500 ETF. When you buy VOO, you instantly own pieces of Apple, Microsoft, Amazon, Google, and 496 other companies. It's up 16.5% this year alone. One purchase. Instant diversification. Zero stress about picking winners. Remember when I said someone investing $200 a month at 22 becomes a millionaire? Here's the math behind that, and why the strategy I'm about to show you makes it almost impossible to fail. AI companies in the S&P 500 are exploding right now. We're talking about the biggest technological shift since the internet. But timing isn't what matters. What matters is a strategy that works whether markets go up, down, or sideways. Real talk. What's your age? Let's see who's going to be the youngest millionaire here. This is the strategy that removes emotion, timing, and stress from investing. It's called dollar cost averaging. You invest the same amount at regular intervals no matter what the market is doing. Market up, you buy. Market crashing, you buy more shares at a discount. Market sideways, you keep buying. Over time, you average out the price and avoid trying to time the market. Think of it like going to the gym. You don't get strong from one perfect workout. You get strong from consistency. Set up automatic investments of $50, $100, $200, whatever you can afford, and let it run on autopilot. This is how ordinary people build extraordinary wealth, not by being geniuses, by being consistent. But I know what you're thinking. What if I start investing and the market crashes tomorrow? Here's the truth. Nobody tells beginners. Market crashes are opportunities. If you're young, the 2008 crash, people who kept investing became millionaires. The 2020 COVID crash, the market recovered in months and hit all-time highs. When you're in your 20s, you have decades until retirement. A crash means stocks are on sale, like your favorite brands going 30% off. Okay, I know I threw a lot at you, but here's the good news. You only need to remember one number to start. But there's one move you need to make in the next 24 hours to benefit from everything I just told you. Your 60-second action plan. Screenshot this. Today, open Fidelity or Schwab. This week, Deposit $25 to $200. Right now, buy VOO or VTI. Set it. Automatic monthly investments. Done. You're now an investor. In 10 years, you'll either look back at today as the moment everything changed, or you'll regret wishing you'd started sooner. The market doesn't care about excuses. It rewards action. And no, you don't need to become a finance bro who talks about alpha and beta. You just need to be consistent. The AI boom, it's not going to wait for you. Compound interest needs time to work. Every month you delay costs you thousands in future wealth. Smash that like if you're actually opening an account after this video. Remember when I said every day you wait costs you thousands? You just spent 7 minutes learning what 90% of people never will. Now comes the part that separates you from them. Action. Open that account before this video ends, because the difference between future you being wealthy or wishing you were, it's the next 60 seconds. See you in the next video.